Ladies and gentlemen, boys and girls, we're live, rock and rolling Thursday. So we're going to do a market recap. So we're going to break down the dollar. Then we're going to go into, we'll do the US dollar, Japanese yen, Bitcoin, the S&P, the NASDAQ, Grandpa Dow, and the Russell. And we'll touch on some of the big tickers, see how they did today. Yesterday, we went into pure panic mode. And I got a little bit poorer. I did go short the U.S. dollar, Japanese yen, and it did go up today. So I did tag out. I tried. I tried to catch that knife. I, I did. I wanted it to turn around, but it didn't. Right now, the dollar is just too strong. I don't know if I want to get in it long. If it pulls back and makes a higher low, I probably will. Right now, I'm just not in any Forex plays. Look at the U.S. dollar, Japanese yen. I just couldn't help myself. It was right there inside that zone, but I did actually keep it tight right above this previous one, and it was a lowercase L. Okay, it wasn't a capital L. It was a lowercase L. So there's that. It's an L for a reason, though. All right, moving on to Bitcoin, because this is going over the Bitcoin, the S&P, the NASDAQ. Yesterday, we went to panic mode. Now, we went into panic mode because there were supposed to be 4 rate cuts next year. Powell said, turns out there's actually only going to be 2. And a lot of people thought that's a sign of something's up. Now, that's a lot of uncertainty because Powell said, oh, it's a soft landing. We nailed it. We were prepared for this. And a lot of people were buying stuff in the market like things were fine, sunshine and rainbows. Turns out that was not the case. What the market doesn't like is uncertainty. They like the fact that every report that came out that said, we're good, we got this, tools in the belt. You've heard Powell say the same thing over and over again. Market finally started to believe it, and then they kind of walked that back as far as expectations go. So everyone, I wouldn't say they panicked. I would say there's a lot of people that are up a lot of money right now, and they probably just either locked it in. Yeah, I would have to say most of that was probably profit taking. I bet a lot of people didn't want to take profits. They would probably rather push it off until January 1st so they can put on the next tax year. But given that, um, there was a couple big sell orders. We got outside some standard deviations, so now market makers had to jump into the mix and possibly cause like that vacuum down to like 2 standard deviations that some was going to. But overall, in the grand scheme of things, like we talked about yesterday, the warning sign that we got yesterday was kind of how fast and how we've seen pullbacks of this magnitude before. Now, in the grand scheme, that pullback is quite literally nothing. I mean, here was yesterday's absolute panic mode. What if I told you to buy Bitcoin at $67,000? But here's the kicker. It's going to go to 108 and pull back to 97. What are your thoughts? Not one person would turn that down. If I said, hey, I got to tell you the future, but you can't exit because then people will know I'm giving you the future secrets until it pulls back to 97. Of course you're doing that, and you're probably still holding because who cares about that? Pullback's absolutely negligible. What did inspire the panic was the speed and rate at which it happened. And that's why when I went live last night, I was talking about let's see if we chill out today. I said today we're either we could chop down, we could chop up, we can go sideways, we can kind of just chop around, but we need to settle down, and it's probably more along the dip buy side of things. If we were to match yesterday's energy today, then the crash is starting. And I've talked about a crash. I want to say maybe October is when I started talking about it. For sure, November. Again, I actually still think it's going to be March of next year. But yesterday, I did have a lot of people asking, is it here? Is it now? Is the crash in the room with us? And after today's price action, I don't think so. I kind of think January will be at least a little bullish, if not roaring. I don't want to give anybody FOMO or anything. But for now, I wouldn't go betting the farm. I would just be on the dip buy side of things as shorter term swing trades. Intraday stuff is just kind of day trading. That's case by case. But I didn't want to delete this channel down yet. Breaking this channel down means absolutely nothing. It means nothing if you know nothing about technical analysis. This channel up is cool. A channel up is higher highs and higher lows. Let's delete that. What do we still have? A higher high and a higher low. So the channel up is still there. It just wasn't as clean if I can just draw an actual parallel lines on it. If we bounce right here, still in channel up, everything's fine. It was the dip buy. Now, we're going to break down the futures market as well. We're going to have the same conversation. If this bounces, what I am looking for is not a new high. We could bounce up, be pretty bullish, and kind of get up here, get to that 105, 106. Still not a new high. And if we roll over at that point, what we'll end up doing is setting in a low. And what I'm watching right now, and this is Bitcoin, S&P, the NASDAQ. That's it, because the other one's already down. Every time we put in a higher low, think of that wrench, like an actual wrench. If you've ever worked with tools, it just makes that click noise. It doesn't go back. Every higher low we put in now is one more click on that wrench. And when that low breaks, that's when we'll be talking about things trending down. Zilvenistics, I'm not butchering that name, says it crashed. What crashed? Just so you don't say anything like that ever again, this is for everybody. Here's the actual definitions, so you can sound smart in all the discords. A pullback, 0 to 9%. A correction, 10 to 19%. A crash, 20% or more. Oh, I even referenced knowing how to work with tools. And I said wrench. It is a ratchet. That's completely my bad. 97,000 for a one coin? Yes. You don't have to buy a whole coin. I wish people would stop talking about that. You can literally just put in $20 worth. Okay? You'll get a fraction of it. That's it. The amount of people that don't buy Bitcoin because they can't afford a whole coin, so then they go out and buy something silly like Hawk Tuah coin or Pepe coin. I don't care if you made money on it. You didn't make money on Hawk Tuah coin, but silly, right? That's like saying I don't want a part of the Mona Lisa. In fact, what I can't afford is that kindergarten's little marker color page. I'll take that instead. I'll try to sell it on eBay for something. Now let's talk about the next stops. If this does break, honestly, I think if today's low breaks, then right now I do think the next stop would be about that 92,000 mark. In fact, this whole channel up, if I'm going to be catching knives on Bitcoin, I would not really catch the knife until 86,000. That's just me personally. So we zoomed up into this, and then we kind of had this channel up where the kind of momentum slowed down. If we melt and send it, we could get a decent bounce at this one. Actually, all three of these yellow zones could get a decent bounce. Me personally, it would need to be here. At that point, we might be a little oversold for the current conditions. And at that point, at least a dead cat bounce or some kind of pop. I would rather that to get my stop in the green. For the record, though, I don't trade Bitcoin. I just buy it. I buy it every week. My goal is to have, and it's been this way for years, 20 coins, and I want to sell them at $1 million. By the time it gets to $1 million, that plan may change, but we'll cross that bridge when we get there. For now, 20 coins, $1 million. Let's see. Bitcoin dust. Exactly. Call it Bitcoin dust. Just don't call it too expensive. That's a big flaw I see. Now, at this point, I've helped thousands of people. I have a Patreon for people that like the monthly, right? I have a course. All the YouTubers have it, right? But I've helped thousands of people. And it's literally mind-blowing how many people will buy something cheap because they can afford a certain amount of shares over something better. Like, when Amazon was $3,500, they wouldn't want to buy it because it's too expensive. But they'll buy $3,500 worth of Peloton, right? And then because they can buy it. You're not playing market maker. I promise. Put your money where it counts, not some number you made up in your head. All right, S&P. Yesterday's panic mode ran it all the way into this bottom zone. Today we have a little bit of a bounce. As far as the futures open, they open up right now. We're down, which is fine. When I say fine, if your positions are long, you don't want to see that. But a red candle this size, that's nothing. Especially after this aftershock, you chalk it up to whatever you want. That's nothing. That breaking, this particular low breaking, I'd worry about. This is like ES down here. That would put SPY. Yeah, somewhere in the 570s. Yeah. Now, most of you guys know the ETF SPY. I don't chart this out. I don't zone it out just because that's silly. But let me pull up the expected moves for you guys so I can show you what I mean by market makers and how we knew this level was going to be there. All right, SPY is 3 down. SPY, 2 standard deviations, 588.61. Where's that at? 588.60. Close enough. Again, inside this range right here, it's you and market movers. Okay, market makers don't know about you, they don't care about you, and they never will. You can write them a strongly worded letter, they probably won't read it. But when we get outside this range, the market makers, they are a neutral delta. That's it. They provide the playing field between you and the market movers. When we get outside here, they're no longer at a neutral delta, which means they have to start delta hedging. And now it's you, the market movers, and the market makers on the playing field. So you're playing chess with somebody. A third person walked up and started moving the pieces. Hopefully it's on your side and not the other guy's side. But tried to rein it back in, and it almost looks like we're going 3 standard deviations. Right now, there is a 95% chance we weren't going to break this. There's a 99% chance we don't break 3 standard deviations. So we're already in the 5% this was even going to happen for the week area. So it doesn't mean anything, but if I had to guess, we probably rein it back in, maybe a little bit more bullish. What about when you get into third? It's all the same. They'll kind of navigate to this zone, or they'll be in the next one. Ready to buy the big red candle. We're here now. I do think I would be, if we're red tomorrow, I'll be bullish over the weekend. Uh, Again, you might just show up on Monday and see that I lost a little, made a bunch. Doesn't matter. It probably won't be enough to move the needle. At the end of the year, I'm just not interested in going crazy. The real big money's already gone. They've already started their Christmas break. Um, so I wouldn't worry. NASDAQ, I do think is a knife catch right now. I don't think that's a bad one. Looking at the Qs, haven't quite made it. So all we did was gap up into 1 standard deviation. They're kind of selling back off. Someone asked me about 0 days to expiration. This would be one of those times. Tomorrow morning, I would end up going probably at the money. If we opened up right now we're at 512.60. If this was 8:30 in the morning, options market just opened, I would go long QQQ 513 calls. 0 to hero. There's no stop. There's none of that. It goes up and it makes me money, or it goes away. I don't care about any other opportunity. That's it. And that's the one instance I would play the 0 days to expiration. Does it get more volatile the further from 1 standard deviation you get? It doesn't get more volatile the further you get. It just gets volatile. By the time the market makers enter the space, somebody's already there. Now they're saying like, all right, we're gonna move it to here. We were here. We're gonna move it to here. And if you keep jacking around, then they will move to here. But it's hard to put there's a lot of things that's going to contradict this. We start selling off outside of Vega, panic and emotions kicking in. If all that didn't exist, market makers would come in, start delta hedging. It'd probably go to 2 standard deviations. If everybody's chill and done, it's done. They start sending it any further. Now they got to start delta hedging even more, which is why that volatility it just enters and it's like a vacuum. It'll just end up sucking up or down. I'm a new investor, and I bought a lot of stuff this morning, like an idiot. You can buy a lot at any time and day. The part that would make you an idiot is buying without a plan. That's it. Every day you should plan for a red candle, a big green candle. Without that, you're just gonna you'll be too surprised all the time. So you bought a whole bunch. So right now we have no idea if tomorrow's going to be bright green, bright red. You can make the best decision with the data you have at that time. That's literally all you can do. The reason why you have stops at a plan is because you think it's going to go this way, but what happens if you're wrong? And you don't want to get screwed. What coin is this? This, my friend, is the NASDAQ coin. Let's check Grandpa Dow. Now, it hasn't seen this red since 1974 or 78, depending on who you ask in the chat. I kept seeing 74 and 78. There was an article that was even posted. It was 78, maybe. Either way, I don't know if this counts. Technically, that's a nothing day. We did nothing. I kind of want to buy it. I do kind of want to catch the knife. That's M for money right there. For everyone on TikTok that's maybe new to me, that's please don't ever buy the M for money thing. That was just made up. What shorts are seeing is actually a W, and it's gonna go. what's funny is there was a conversation that it had not seen this since it was like since 1978, and then when everyone was already thinking that, they blasted it down even further. So, hmm. It's definitely a knife catch. We're trending down. I think this one is incredibly oversold. And right now, that's why I'm saying bullish. Oversold bounce, a dead cat bounce. There's knife catchers out there. It's at a decent spot, I think. I doubt investors are excited right now. I don't know any investors that just aren't worried about next year right now. Anyone's been in this for a while. So there just hasn't been that urgency like, we need to buy this right now. But I gotta say, that doesn't look bad. Let's just grab a now, don't let me sell you a position because this is what I think a lot of content creators do. They come here and just start saying things. And I can make any position look really good. And then you end up buying it tomorrow because you don't know what you're doing. And then you lose money. But that doesn't look bad. Doesn't look like a bad play. It was green today. Was it? Let's zoom in. You guys be the judge. If it's not green, we go back to 1912. Make it green. Guys, like, I got you. We'll open up at 42,336, and we will close at 42,340. You good with that, boss? I mean, as long as it's green. It's gotta be the easiest day. He's like, I'm still gonna short it though. It's like, whatever, just make it a green day. Let me look at a couple tickers for you guys real quick. LUX